right, rule number 5: always look for strong historical dividend growth. You want a company that has grown dividends for a number of consecutive years. You don't want a company that, let's say, they have a really high dividend yield of like 6, 7%, and right off the bat, you look at it and you say, "Wow, that's great, 6, 7%. That's pretty good." But they've only paid it for a year. Well, who knows if next year they're going to continue to pay that rate or that dividend yield. So, you want to look at companies that have the earnings, have the revenue, have the size, the wide moat per se, that over the course of 10, 15 years, they've continued to grow their dividends, continue to show value to their shareholders as they're continuing to grow their revenue and grow earnings. So, what I like to look for is, there's a list called the CCC. It was compiled by David Fish at dailydividendalert.com. Um, and essentially, it stands for dividend champions, contenders, and challengers. Champions are companies that have grown their dividends for the last 25 years. This includes companies like Coca-Cola, Johnson and Johnson, Procter and Gamble, like the big guys, and they make up. Their dividend yields may be lower, their payout ratios might be a little bit lower, but at the end of the day, these are companies that have been around for a very long time, and that they've continued to show, reward their shareholders. So definitely, you should have those in your portfolio. Take a look at that list. It's a great place to start when doing your research. I'll toss a link in the resources section at the end of this course.